the pace is picking up, and not just because the FTSE 100 has just had its best start ever to a calendar year, at least on the basis of the first 5 trading days. There'll be plenty of news flow to study in the coming week, both from a top-down and a bottom-up perspective. On the macro front, central banks will take centre stage, and I doubt it's the last time I'll be saying that in 2021. The Bank of Canada is first up to the plate on Wednesday the 20th of January, followed by the Bank of Japan and the European Central Bank on the 21st. Remember that the trend in interest rates has been resolutely down around the world. According to the website cbrates.com, 2020 saw 207 interest rate cuts and just 9 increases. Also remember that the trend in QE and asset buying programs and balance sheets was resolutely up. The amount of assets on the Bank of Japan's balance sheet surged by 23%, and the ECB's balance sheet grew by 47% in 2020 as of the last count, and that was just at the end of November. Now, not one of the Bank of Canada, Bank of Japan or ECB is necessarily expected to announce anything in the coming week, particularly the European Central Bank, which increased the scope of its quantitative easing programme, or QE, just back in December. However, the Bank of Japan is currently holding a root and branch review of its policies, and economists will comb the policy statements from all three for any hints on any new thoughts from policymakers on inflation, rates, quantitative easing, growth and even financial markets. Just so you have a benchmark, the headline interest rates at the 3 central banks are as follows: 0.25% at the Bank of Canada, whose last move was a 1.5 point cut in April of last year, 0 at the ECB, a figure which is applied since April 2016, and minus 0.1% at the Bank of Japan, a level which has been unchanged since March 2016. Now, in terms of company news, around half a dozen FTSE 100 firms are due to release trading updates for the quarter or half which ended in December, and a good number of mid and small cap names are due to do the same. Companies which may be worthy of note include the following, although please bear in mind that these dates are always subject to change. Experian, Centamin and Premier Foods on Tuesday the 19th of January, which will also see the first trading statement from miner Rio Tinto under new Chief Executive Jakob Stausholm. Then there's another miner, BHP Group, as well as Burberry, WH Smith, JD Wetherspoon and Dixon's Carphone on the 20th. Entain, Sage and brickmaker Ibstock on the 21st. And Computer Centre will close out the week on Friday the 22nd of January. But the stock which could just cause the biggest fuss in the week ahead is FTSE 100 constituent Antofagasta. The company, which extracts copper at 4 different sites in the Antofagasta and Coquimbo regions of Chile, is scheduled to release a fourth quarter trading update on Wednesday the 20th of January. As I record this, the shares are up by 66% over the past year, enough to make Antofagasta the 6th best performer in the FTSE 100 over that time frame, behind only Scottish Mortgage, Ocado, Fresnillo, Pershing Square and Flutter. Now, this might seem a bit odd for a miner to be doing so well when the pandemic is still a concern and the global economy is still struggling, but the copper price is forging ahead and giving the shares a lift. This is one reason why this update could be interesting, because copper is seen as a key indicator to global economic well-being, hence its nickname, Dr. Copper. This is because the metal's malleable, a good conductor and ductile, so it has many uses in manufacturing, industry and construction. Some analysts are also excited about copper because copper wiring is needed in large quantities for electric vehicles. Besides the copper price itself, there'll be other factors which could influence Antofagasta's quarterly update, and the major ones are production output and costs. In 2019, Antofagasta actually produced a record 770,000 tonnes of copper and reduced its cash cost to $1.22 a pound. At the start of 2020, management guided to output of 725 to 755,000 tonnes of copper at a net cash cost of $1.30 a pound, with, for the record, byproducts of around 180 to 200,000 ounces of gold and around 13,500 tonnes of molybdenum. October's trading update left production goals unchanged, although forecasts were for output was steered toward the low end of that range at 725,000 tonnes of copper. Management held its revised cost guidance of around $1.20 a pound, thanks to good cost control and a weaker Chilean peso. Beside the figures for 2020, watch out for any guidance for 2021. Management has so far forecast copper output for this year of 730,000 to 760,000 tonnes, thanks to increased grades at one mine, although Chile has seen another uptick in COVID-19 cases. Antofagasta has therefore assumed COVID protocols are designed to keep staff safe will be in place throughout this year, even if that could limit output. The miner has been working with around 2/3 of normal staffing levels on site in 2020 due to working from home or preventive quarantine. Now, Antofagasta doesn't normally comment on profit or dividends alongside this fourth quarter update. Those details tend to only come with the actual full year results, which are usually released in mid-March. Just in case, however, for the full year, analysts expect pre-tax profit to drop by around 15% to $1.15 billion in 2020, before a surge to $1.9 billion in 2021. In terms of the dividend, Antofagasta cut its interim payment by just over 40% to 6.2 US cents a share. But for the full year, analysts are looking for around 23 cents, and that implies a hefty year-on-year increase for the second half, thanks in part to that copper price recovery. Management has a minimum target payout ratio of 35% of underlying earnings per share over the long term. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.